Yo, what is going on, guys? Bexio back, and today we got a brand new video. The inflation data just came out, the CPI data, and we are going to look over those numbers and see just how crazy all this stuff has gotten. And we will look right here. This is the Bureau of Labor Statistics, the CPI data here. It breaks it down to like the different categories and stuff, but we're gonna look at the overall one here, and that is 5.4% for year over year. So from June of 2020 to June of 2021, the data shows we had 5.4% inflation, which is crazy. And to put that into perspective, that is the largest jump or rise since 2008. So it makes sense why people would be worried about this inflation. I think expectations were like 4%, so over almost 1.5% over what they said. Plus, we all know CPI can be a little bit uh, misleading because 5.4% is insane. That's a huge number. That's a ridiculous inflation, but it's nothing compared to real estate prices going up, the stock market, Bitcoin, crypto. All of this stuff is also affected with the printing of money. And those, real estate, stock market, Bitcoin, that one may be controversial, but those are all wealth building tools. Those are all things you can build wealth with so that you don't have to live paycheck to paycheck, so that you don't have to worry about where money's coming from. And with them continuing to be priced out, I think it's like 40% of Americans don't have any investments, and that's a big problem. People continue to be priced out with this CPI, this inflation, thinking like saving money can be fine, but not at all. Like compared to what the stock market's done and stuff, it's way outperformed what you could have done by saving your money. We can just look at the S&P 500 here. Here it is, S&P 500 for the past year. So year over year, say this is going to be a little bit longer than what the CPI data is, but CPI is 5.4%. So that means if you had saved $100, you would only have $94.60 worth of purchasing power. Whereas if you put the same $100 into the S&P 500, you would have $138.68. You would have upped your purchasing power, way outperformed inflation, and if you didn't put your money in now you need to put more money in to get the same amount of shares and stuff that you would have as a year ago. So 38%, almost 39 here, could be like real inflation. Assets should be considered in inflation because it's how you can build wealth. It's something that people don't really understand, that if you can't buy the same amount of stocks, or like who cares if your jar of pickles at Walmart costs you an extra 3 cents. It really matters that you could have had Apple stock or Microsoft or just the S&P 500, an index fund, and you could have made 40%. And this is what people are like fascinated about: saving money. They don't want to lose money, and the stock market seems risky to people, but it's how you generate wealth, and it's how you can outpace inflation and put your money to work for you. So one of the biggest things to fight inflation, for my opinion, would be Bitcoin. And obviously we all know Bitcoin, there's only 21 million. That's it. Nobody controls it. Nobody can make more. That's why I think it's one of the best things to fight inflation, as well as fight governments who are kind of abusing the money printer right now. And we've seen trillions be printed, and it's just crazy to see all that money be printed. And these are the repercussions you get: 5% inflation. And every single month, it seems like Jerome Powell's saying that it's only transitory, don't worry about it, it's only these things causing it. But are prices really going to come down? But there was big rumors for Bitcoin here. Apple, did you see this right? Apple really bought $2.5 billion worth of Bitcoin. And obviously there was a big rumor on Twitter that Apple bought $2.5 billion worth of Bitcoin, and they were going to announce it yesterday, on Monday. And I've seen these rumors before, and I didn't think they were going to announce anything. There's a lot to dig in with Apple, and Tim Cook, and they are very, very non-risk. Like, Apple does not take risk, or Tim Cook doesn't take risk. He's the one, pulling the strings back there. But Apple, they do the safe thing. They haven't really tried to innovate, and they're very brand conscious. So for them to get involved in Bitcoin, I would love to see it, and I think they are going to get involved in Bitcoin at some point. But right now, with all of the ESG concerns and energy usage and all of the FUD going around, they just wouldn't want to give people any ammo to attack the Apple brand. So it's understandable why they aren't doing it, why they aren't jumping into it. But that's just some news for Apple. But Bitcoin still, we can look at Bitcoin's chart here. But even looking at Bitcoin's price, like, this is the year. It doesn't give you like a year percent change, or does it? Yeah, it does. No, this is year to date. But you can see the year. It's gone from $9,260, and it's rallied, and right now sits at about $32,564. So that's still way more than 5%, far outpacing inflation, doing better than that. And we've seen in the history for Bitcoin that it just continues to do much, much better than any other asset class that we've seen. And I expect Bitcoin to kind of go on that same route. It's still got their volatility is the price you pay to 10x outperform the S&P. So a lot of discussion on inflation here, and the CPI data and stuff I think is important-ish, but it's not the full story because of the stocks and because of the real estate and all of these price booms. And that doesn't take into account when you do CPI. It does like a bunch of stuff, but not real estate or stocks or these wealth building tools. It's always talking about the consumer stuff, store thing, grocery, gas. I mean, used cars are in there, things like that. So it's just, I think it's kind of misleading. It's kind of misleading because of people thinking, 5%, that's a lot, but they think go back to 2%, that's whatever, who cares? When in reality, the house you can buy, the cost went up by 30%, 40%. You need more money to buy the same house now. You need more money to buy the same car now. You need more money to buy the same amount of stocks now. So it's just something that I think people don't pay attention to, and it goes over their head because they're looking at spending money. A lot of people just look at spending and want to see, what does this cost? Can I still buy the stuff that I want to buy every day? But they don't look at the stuff that can make you a bunch of money, build wealth, and stop making you live paycheck to paycheck. Like, I think it's 78% of people do. So hopefully, but inflation was trending on Twitter, so hopefully people are kind of waking up to this idea and seeing that the devaluing of your savings, the devaluing of the dollar, all of this stuff, the government printing money and devaluing your purchasing power is important. And hopefully they start to see that there needs to be a better way, and Bitcoin could be that way to take away control of the monetary policy and give it back to the people who want to just have their money, earn their money, and make sure that their money doesn't just go down in value because somebody else decided to print more. But that's going to do it for this video, guys. Make sure that you smash that sub button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.